Hey guys, Luke Turner here with Jail Strategic Wealth. Thank you for coming to the channel. The goal of this channel is to just share stories about things that we've seen be really helpful and productive for folks in their personal financial life. And in this situation, we're going to tell a story about an entrepreneur who is able to supercharge his giving and reduce his taxes by utilizing one simple strategy. So let's just talk a little bit about the situation and the story for this entrepreneur. So we're going to call him Bob. Bob is a HVAC owner down in Florida, Texas. Obviously, in the state of Florida, there's no state income tax, and he's going through the exit of his business. And he's looking at selling his business for about $10 million. And it's September of 2022, and he wants to make sure that he's doing everything in his power before the end of the year to eliminate or avoid taxes or defer taxes into the future. So one of the things that as we go through the conversation with Joe is we start to realize that Joe's really passionate around legacy planning and giving. And one of the things that is really valuable when you're charitably inclined is that there are a lot of tax benefits you can utilize when you are so focused on legacy planning. So in this situation, the strategy that we utilized, it was able to get him multiple tax benefits and actually dramatically reduce the amount of tax exposure he had at the end of 2022 and when he had to pay taxes in the upcoming year 2023. So what was that solution that we utilized? So the solution we utilized is what's called a donor advised fund, and we were actually able to reduce Joe's taxes from paying $10 million of adjusted gross income down to $9 million. And the way that we were able to do that is by shifting assets from his personal bucket into his charitable bucket. So when we just think about this from a real numbers perspective, and we just kind of do some back of the napkin math here, federal capital gains rates, he's going to pay about 23.8% on those capital gains. So at $10 million transaction, you're going to pay about $2.38 million. So for every $1 million we're able to reduce his income, it saves him about $238,000 just in tax liability. So in this situation, if he moves $1 million from his personal bucket over to his charitable bucket, it's going to reduce the taxes he's going to owe by $238,000. So that's exactly what we did. We shifted $1 million from the personal bucket into the charitable bucket. Now, one of the other things that was very unique about Joe is that Joe had some great investments that he had made prior to selling his business. One of those was his Apple stock. So Apple stock has grown dramatically over the last 10 years. And in this situation, he had a large position, a concentrated position in Apple stock, and was trying to figure out, is there any way for me to reduce my exposure to Apple? And in this situation, what we're also able to do with a donor advised fund is we're able to shift the Apple stock from his personal name into his donor advised fund without selling it. And we're able to eliminate the entire capital gain on his Apple position. So again, in that example, if he has Apple stock that he paid $100,000 for, now it's worth $1 million. Normally, you'd have to pay $900,000 in capital gains taxes, or the difference between your basis and what it's worth today. Well, for Joe actually had to pay zero taxes on that additional $900,000 in gain because he used it for that legacy planning and moved it from the personal bucket into his charitable bucket. And then the other important factor for Joe that he was trying to figure out what to do with is controlling the assets and then also growing those assets in the donor advised fund. So Joe was very passionate about a lot of different charities, but he didn't want to give away $1 million in 2022 to get that tax benefit. So utilizing the donor advised fund, it allows him to get the donation or the itemized deduction on his tax return, and the IRS treats it as if he's given the money away. But Joe is then allowed to, over the course of any period in time, give away that $1 million. So it allows him more control over those assets. And then lastly, that $1 million can be invested into the market. It can be invested into the private markets. So all the growth that happens on that $1 million, say it grows from $1 million to be worth $2 million, is completely tax-free. And again, it just allows him to just supercharge his giving even more and get those tax benefits. So let's just go ahead and recap here what the donor advised fund benefits are for Joe, the business owner that was selling. So there's really three main benefits. The first is capital gains taxes. So if you have appreciated securities, you can eliminate taxes on those appreciated securities. The second is you can reduce your taxes. You're going to get an immediate tax deduction today. And then the third is that you can grow your assets tax-free. So all the assets that go into your donor advised fund, as they continue to grow, they grow completely tax-free. So if you enjoyed this video and want to continue hearing more stories about ways where you can improve your financial situation through different strategies, please subscribe to the channel below. You can also follow us on Twitter at LukeTurner_CFP. Thanks, and have a great day.